everyone, it's Chrissy and
Merrill Jencks.
And we are here for Mortgage Monday. And so Merrill and I were just chatting. We didn't really have a topic for today, but Merrill actually brought up something to talk about.
Yeah, so, I get a lot of the same questions over and over again. And so I figured, well, if these clients have these questions, I bet a lot of other people do too.
Yeah, and they're actually two I hear a lot. So
Yeah, exactly. So the first one is, how do I improve my credit score?
Okay.
Right? I mean, we get that question all the time. And there's a lot of different factors that, go into your credit score. And oftentimes, all of those different, nobody, the FICO, there's no, they don't publish the formula of exactly how the credit score is determined.
Okay.
So, sometimes it's a little bit speculative, but we have found several very specific strategies that you can use that we see over and over again really help people raise their score.
So this is important because a lot of you guys think that getting your credit score up is just paying down debts. There's so much more to it.
Yeah, exactly. And part of it depends on what's causing your credit score to not be as high as you might like it to be. But most of the time, we either see someone who's got a lower credit score, they have some derogatory items on their credit report, or their credit to balance to max balances is too high, or they just don't have enough credit.
Okay.
So let's talk first about people who maybe have some derogatory items, a couple of late payments or some medical collections or different things like that, or your balances are too high.
Okay.
What you want to do is, one of the big things that they look at, I mean, obviously paying things on time, and you already know that, but a big thing that they look at for your credit score is how much credit are you using compared to how much credit do you have.
Okay.
If your maximum amount of credit that you're allowed to have is $20,000 and your current outstanding balances is $19,970, it's going to hurt your score.
Okay.
What you want to do is keep your balances low as possible. I'm talking on credit cards, right? Revolving credit. So if you have a credit card with a $5,000 credit limit, keeping the balance on that card below $1,000 at all times will do wonders for your credit report.
So it's like under 20%.
Yeah, keep it under 20-30%, for sure under half. Definitely don't go, over half. And sometimes when people, they've been working on paying off debt and they've paid off, one card is completely empty and the other one is maxed out. Sometimes it's not a matter of, gosh, I need to pay all these thousands of dollars out of pocket. Sometimes if you move your balances around a little bit, it will help you improve your credit score because you're lowering the balances on each card.
Okay, that brings up a question. I'm going to hit you with this one.
Okay.
I've heard people that just keep a zero balance. Is that a good thing or a bad thing?
Well, it's better than closing the account completely. Closing the account can hurt your credit score, but I mean, I do like to tell people, let's be honest, what the credit bureaus really want to see is, I sort of feel like it's a little bit of a conspiracy. Part of what's going to give you a good credit score is, are they going to make money off of you, right? If you've got credit and you're never using it, that's not showing then that you're able to make your payments and all those kinds of things. So keeping a very, very low balance on things, even if it's like literally a candy, well, I don't put that poison in my body. Taking gas or a package of healthy nuts, something like that. You keep the balance very low, and you can pay it off, and then just keep it low, pay it off. But even if you can't pay it off, keep your balances really low. That'll do wonders for your credit.
So showing that you use it, because I have a lot of people that are like, well, I just pay it off before the bill comes. That's not doing anything for you.
Right. Yeah. Pay it on time. Pay more than the minimum payment when possible. And but don't recommend paying it off, and definitely don't close it.
Okay.
And sometimes if you've had, let's say you've had a credit account for a while and your credit score has gone down due to some other collections or things like that. Sometimes when you pay it off, the creditor will close the account because they think that you're now a higher risk a consumer compared to when they first issued the card to you. And so if you're concerned about that, I would advise maybe not paying it off at all, but just keeping the balances very, very low.
Okay, perfect. That's good advice. So.
Yeah. The other item that I thought we might touch on, and it's just something that I get a lot of questions about, is, it's sort of connected to closing costs, but I want to talk about your escrow account. If you already own a home, you know that part of your monthly payment is, let's say that your total house payment is, $1,500 a month. Well, maybe $1,200 or $1,100 of that might be principal and interest, and then $200, $300, $400 a month is going into your escrow account. And I know when I first bought a home, I did not understand what that meant or what it was or why I had to pay so much of escrow fees when I closed on my house. So your escrow account is basically funds that your loan servicer is going to collect up front to make sure that there's enough money to pay your property taxes and your homeowner's insurance when those come due. Here in Arizona, property taxes are paid twice a year, and usually your homeowner's insurance policy is only paid once a year. But they don't want to risk, just, you pay your own homeowner's insurance policy. The lender is looking to protect their investment. So they want to make sure that the taxes and insurance are getting paid. And so they collect the money from you each month. Let's call it $400 that they're collecting as part of your mortgage payment each month. And it's going to sit in that escrow account until one of those bills comes. And then when the tax bill comes, they pay it out of the money that is in your escrow account. But when you close on a house, a big part of the closing costs that you have is paying into that escrow account. Because they want to pad it. They want to make sure that they're not cutting it too close. So they're going to collect 3 or 4 months worth of homeowners insurance and taxes up front to hold into the padding of that escrow account to make sure that there's always going to be enough money in there to pay your taxes and insurance.
That makes a lot of sense too, because I know a lot of people play with those calculators online and they wonder why the payments are different and why. Blah, blah, blah.
Yeah, a lot of those, I'm glad you brought that up. I was going to caution about that. A lot of the time we get people who think, okay, I did this mortgage calculator and it says my payment should only be this. But then when we actually tell them what the real payment's going to be, they're disappointed because we're factoring in the taxes and insurance that are going to be collected out of the escrow account. Darn those taxes, but they've got to be paid.
And honestly, this is better because it's like a savings every month towards paying those. You don't want to get hit with a bill at once.
Right.
So I don't know how many people have thousands of dollars just sitting around for here's my property.
I mean, when you own a lot of people who do own their home free and clear, there is no escrow account, and so they do just pay their taxes and insurance by themselves, which is great. But I kind of like the idea of, hey, I'm setting money aside every single month to pay those things. And then when you go to refinance, oftentimes there'll be leftover balance in your old loan's escrow account, and you get a refund for that money.
Oh, that's perfect. That's really cool.
Yeah.
Awesome. So 2 basic questions that we hear a lot, but they're answered. So if you have any questions, you can find me on this channel, and Merrill will post his information shortly. You guys can get a hold of him and ask.
Yeah.
So
awesome. Thank
you guys for watching.